Good morning from London. I'm Anna Edwards alongside Kriti, Gupta and Lizzy Burden. We're an hour away from the opening trade. Here's what you need to know. Kamala Harris looks to unite the Democratic Party after securing enough delegates to become the Democratic presidential nominee, according to an Associated Press tally. The S&P 500 gains the most in 6 weeks. Traders look to earnings from Tesla and Alphabet to keep up the momentum. We will preview the numbers. And in Europe, SAP gets a boost from AI demand, while Porsche cuts guidance on supply chain shortages.
In the meantime, a quick check on these markets. You are seeing futures having decidedly two different directions on the continent and right here in the UK. Euro Stoxx 50 futures higher by 0.2%. FTSE 100 underperformed by 0.3%. It's the currency picture, it's the bond picture that I think is really interesting. 2-year yield 4.51, euro dollar 108.90. The countdown to the opening trade starts right now.
Welcome to the programme, everybody. 7:01 here in London. We have to talk about earnings, the things we've learned so far, the things we have yet to learn from the earnings season. We try to put the tech disruption of Friday and the weekend behind us, but political disruption certainly on the market's minds. Let's start with US politics this morning. And Kriti, it seems as if Harris is doing what she needs to do very quickly to secure support from the rest of the Democrats.
This week is make or break for her. There are so many people on both sides of the Atlantic, by the way. I'm going to bring the European story into this, who are saying she hasn't been that visible. These relationships haven't been made. Her foreign policy record is unclear. Of course, voters within the United States aren't voting on that foreign policy record, but internationally, that seems to be the takeaway. This also comes in the context of the likes of Viktor Orban, for example, already being very friendly to Donald Trump. What about that friendliness on the other side if Kamala Harris enters the White House in January?
I thought it was interesting to see the comment from the Serbian leader saying that she could use the endorsement of Michelle Obama and she could use that emotion and charisma from Michelle Obama. But she is, as you say, getting lots of support stateside, including from the crucial Democrats. She's got enough technically to actually seal the deal. She just needs to get it rubber stamped at the convention. But nice to see for her the runners and riders for the Democratic nomination getting behind her. And then she's got her pick of the run for the VP candidate as well.
Yeah, absolutely. So it's an unofficial tally that we have from AP so far, but it does seem to tell us, Kriti, pretty much what we need to know. And what is interesting is that we have seen those who could have challenged her fall in behind her, and one of our columnists this morning making the point that many of them are still pretty young. Many, Kamala herself, relative to the previous runners, pretty young. But the people who could challenge her also young, and so they could line themselves up for 2028 or beyond.
And that was kind of the logic behind her even becoming Joe Biden's VP, that it would set her up for success down the line. Let's talk about next steps here for our international audience, because this really comes down to a virtual roll call. That's where she really needs to solidify it. They're fighting basically the Ohio ballot deadline of August 7th, which means not only does she need to secure that nomination beforehand via the virtual roll call, expected to be the first week of August, but ideally have her VP as well solidified by then, if not by then by the convention on August 19th.
I like how they have this virtual roll call, this quick tech solution to the Democrats' problem of how to do a lot very quickly. Let's move on to markets, shall we? Because that takes us to technology as well. Or in fact does it? Because yesterday we saw strength across the board, didn't we? The S&P, the NASDAQ, the Magnificent Seven within that, all of them up by more than 1%. But it wasn't all about a rebound in those names and a sell-off in small caps, because actually the Russell 2000 to the party as well for a change. So last week was all about selling the mega caps and buying the small caps, at least the start of the week was, and now seems to be a much more broad-based risk rally, perhaps a little bit of certainty into the US political story, even if only at the margin, helping there. But interesting, in the MLive Pulse survey, asking respondents what they think is going to drive earnings, and they are all pretty confident. 2/3 of respondents say that stocks are going to do well, and it's earnings that are going to boost the S&P.
We're coming right back to the fundamental conversation. After we get out of the kind of capital fund flow situation, the rate story, the geopolitics of it all, it comes back to, is Microsoft and company going to be making more money in the next quarter than they have made in the previous quarter? I think what's interesting here is the way that this trade plays off. We talked about the unwinding of the chips trade being partially something that could be geopolitically related, and yet here we are. Remember, we do have Alphabet reporting after the bell today, and I believe Tesla as well.
Yeah, I want to see all about the robo-taxi plans from Tesla, but we also get European earnings as well. We, speaking of tech, got SAP results overnight, second quarter results out of Germany. This, of course, Europe's biggest biggest software firm, and it's a pretty good picture, actually. The AI demand boosting growth for cloud subscriptions. You've also had, speaking of auto earnings, Porsche. This is not, the full half-year results yet. We get them tomorrow, but bad news on top of bad news for Porsche, really. You've had flooding at one of the suppliers, so they're going to have a shortage of aluminium parts, and this is after yesterday, of course, they had the news about abandoning its EV sales ambitions.
So this is interesting because these two companies tell us a lot about some of the big picture stories we've been covering around earnings, don't they? So on the Porsche side, you're right, we're talking about supply chain issues and we're talking about EV sales and the sluggishness there. And then, Kriti, when it comes to SAP, we're talking about AI. And it is SAP's ability to bundle AI in with its cloud offering that seems to be encouraging those businesses that have been dragging their feet on moving from on-premise to the cloud. Well, AI seems to be the final sort of cherry on the cake that just persuades them to go that extra mile and to do that.
Yeah, it's a really interesting one as well, because we have cloud and cars basically here in Europe, which, to your point, you're talking about a microcosm of the broader trends. I wonder how much of it is an indicator for what we get out of Alphabet and Tesla in just 24 hours as well. And we should also mention that there's this added element of cybersecurity risk right now. One of the worst performers was CrowdStrike. We're still dealing with the ramifications of a global tech outage. What is Alphabet going to be saying about that? Plus, what is Alphabet going to be saying about its lost bid, by the way, of Wiz, that cybersecurity firm, which is all the rage right now, choosing instead taking that $23 billion offer to IPO instead. There's a lot to dive into, but let's get back to our top story this morning, which, of course, is Kamala Harris and what's going on in Washington, D.C. Bloomberg's Vonnie Quinn standing by for that coverage. Vonnie, these developments keep rolling in. Kamala Harris, a make-or-break week. What are you hearing?
Well, Kriti, in the last few hours alone, she became the presumptive nominee and she turned the Biden campaign headquarters into Kamala headquarters. And notice the branding, right? It's just her first name. Now that she has the support of the Democratic Party, a united and motivated Democratic Party, she's going to want to crystallize that. She's going to want to keep that momentum going. And to that end, she's going to want to introduce herself to the voters, which she begins to do tomorrow. She's going to a campaign event in swing state, Milwaukee, Wisconsin, a critical swing state and the home of the RNC just a few days ago, which was so positive for the RNC. Well, Kamala is going to have to prove that she can beat Donald Trump, and she is going to have to introduce herself to all of those people who only know her as vice president. And bear in mind, as you mentioned earlier, as vice president, you don't particularly get to pass on your policy ideas. You don't particularly get to express yourself in ways that you might if you were to be president. And that's indeed what she wants to do now. She also wants to continue to appeal to big donors. More started coming in this afternoon, including Abigail Disney, which is a huge win for Kamala Harris. And also, of course, she got the endorsement of Nancy Pelosi, who will introduce her to more donors. We also know that plenty more Wall Streeters are getting behind her, including Ray Maguire of Lazard and Ralph Schlossstein of Evercore.
So that's some of the money that's coming in now, Vonnie. What do we know about Harris's tactics and how she wants to set about trying to beat Donald Trump?
We got a little bit of a view into that today, and she's not afraid to go low, and she also wants to talk policy. So today at campaign headquarters, when she was speaking with her staff, and just after President Biden phoned in to offer her complete support and to say that he would be campaigning alongside her, she gave us a little glimpse. So she basically talked about her past as an attorney general in California and a prosecutor, and how she had met and prosecuted fraudsters, cheaters and criminals, basically. And she said, so when I tell you that I have met people like Donald Trump and that I've prosecuted them, you better believe me. So you know that she is going to attack Trump where he most is expecting it and where he will try and attack. But she also got into some policy. She talked about women's reproductive rights and how important that was to her. And we also know that Republicans are going to try and attack her on economic policy, on inflation, which has been so difficult to deal with across the country, and of course on the crucial issue of immigration. And she has those battleground states to win, but she does have some strengths as well. There are plenty of segments of the population that would be very, very happy to see the first Black Asian woman in the White House.
It's a really fascinating one. She's really leaning into, of course, the many firsts that she's had across her time in Washington and specifically in California. Bloomberg's Vonnie Quinn in Washington, D.C. We thank you so much for those updates. I think what Vonnie didn't mention is that in addition to really sitting on her kind of first as in her racial kind of first, being the first South Asian senator, for example, being the first woman of color as district attorney, she's also arguably the first to lean into the meme mania. I learned this feels like a Lizzy conversation. I learned what a brat summer was this morning.
Calling me a brat?
No, but I'm calling. Well, we should clarify for our international audience who may also know what a brat summer is. I had to do some in-depth research with the hip people on this. But basically, it's the idea that you can be a little wild, you can be a little fun, you can have a little bit more enjoyment. And the reason I bring this up is because she got the endorsement not only of the heavyweights that Vonnie laid out, but the endorsement of a singer, Charlie, as well, on social media. And now her entire campaign is leaning into that meme and into that album. And I think the general point here, jokes aside, is that she's really highlighting the fact that she is not her predecessor. And
going for a younger demographic.
I have to say, memes are fine as long as you're not the butt of the joke. Liz Truss
I don't want to be the meme.
Yeah, the memes the other day about the global outage were all that it was Liz Truss's first day at CrowdStrike or Microsoft. So that is not the sort of meme frenzy you want.
No, but this is the kind of meme frenzy that she wants to generate then. I do think it's interesting, though, this idea of her being launched into this. Okay, she's not an unknown. She's been vice president. Of course, everybody knows who she is. But to some degree, as Vonnie was saying, there's a lot we don't know.
Yeah.
And what does it tell us if we get quite a short campaign, actually, for her? Do you manage to preserve and hang on to some of that honeymoon period that others would have lost long ago in the campaign?
Yeah, well, this is why I'm saying there's such a make-or-break period for her, because on the one hand, she really has to appeal to the general demographic. She still has no dissenters with the Democratic convention. That is still subject to change. And internationally, I should bring out, I was reading Politico this morning and was reminded of comments that Isabel Schnabel actually made off, not knowing that she was mic'd up, but saying that no one internationally really knows her. So this is the point of her really leaning into that domestic crowd, and we'll see if it ends up kind of paying dividends down the road. In the meantime, let's talk about what else we've got coming up on the show today. Of course, we're going to check in on the markets, the read-through, perhaps the geopolitics, but how much of the story returns to the fundamentals. We have great guests out of M&Gs and Aviva as well. But then the political story is crucial and top of mind. The LSE's Peter Trubowitz will join us to discuss the latest in those U.S. elections and, of course, what that VP pick may actually be. Plus, of course, we are, of course, missing Guy Johnson around this table. He sits down with the Airbus CEO at Farnborough Air Show in Southeast England, I think.
Yeah.
That sounds right. Go ahead.
Yes, indeed. So that's what we're looking out for today. And we'll have plenty of earnings stories as well. Alphabet, Tesla, we've talked about those a little bit too. Let's move on to some of the other top stories that we need to talk to you about in terms of what's coming up. I think you've been through this already, Kriti, haven't you? Isn't this what you've done?
We've done a little bit of the of what we're expecting. We've got plenty of earnings. We've got a little bit of data. We've got a lot going on in the next couple of 24 hours, I should say. But I think this is the conversation we're going to continue to have throughout the show, which is simply this idea of what trumps it. Was it the political? Is it the earnings story? Is it the fundamentals? Is it the monetary? There's plenty going on. We didn't even mention that Benjamin Netanyahu is actually in D.C. right now. He is due to meet the president. And, of course, that's going to be something that hits a lot of political turmoil, and potentially see what Kamala Harris says on the back of that as well. Those are just some of the things that we're watching from an economic point.
Yeah, and it comes back to the question of how much Biden can actually achieve on the foreign policy front before January. He is ambitious, but he's also a lame duck. But here's what else you need to know this morning in terms of top news. The European Union's foreign policy chief says that he plans on moving an August meeting of the bloc's foreign and defence ministers from Budapest to Brussels in protest of Viktor Orban's diplomatic forays. The meeting is traditionally convened by the country that holds the EU's 6-month rotating presidency, but EU member states are angry over the Hungarian Prime Minister's recent visits to Moscow, Beijing and Donald Trump's Mar-a-Lago resort in Florida. In other news, Emmanuel Macron has called for a political truce during the Summer Olympics in Paris, which begins this Friday. The French president dissolved the lower house of parliament last month, leaving it with no clear path to form a new government. It's possible Macron could now wait until after the Games end in August to appoint a prime minister. And a US House committee has called on the chief executive officer of CrowdStrike, George Kurtz, to testify on a defective software update that caused widespread global outages. Congressional committees have the power to compel testimony by issuing subpoenas, but usually first ask witnesses to appear voluntarily. Well, that's an interesting one, isn't it? Because you have had him apologising, the CEO of CrowdStrike, but then there are all of these accusations swirling, really, that actually the company put profits before getting the basics right, and you have to ask whether the company's going to learn from that mistake.
Yeah, this is a theme that we keep hearing over and over again. This was the main issue with Southwest Airlines, for example. I talked about this, that they're lacking the infrastructure. But remember, this is coming also in this kind of vacuum of excitement around cybersecurity in particular. And that's where CrowdStrike has become such a part of the narrative and part of the software as well, because this came really in a lot of these cybersecurity stocks, CrowdStrike, Palo Alto Networks, Datadog, Fortinet, others as well. Arguably SAP, you could throw that in there. off of when the war in Ukraine really began. This need for cybersecurity became far more emphasized, and now you're seeing the risks that come with it.
Yes, I mean, SAP very much around enterprise software, but I take the tech link. It does strike me that you mentioned all the things coming up at Farnborough, and Farnborough does seem to unite so many of these stories because the CrowdStrike episode has such an impact on the aviation sector. You've got US politicians in Farnborough, we heard some yesterday, talking about US politics. So there's plenty to talk about when it comes to all of our agenda items on the ground in Farnborough, which was where Guy is. And some of the airlines have managed to get their act together already. United saying they managed to manually restart 26,000 machines after what we saw from CrowdStrike and Microsoft.
Yeah, but Delta last night saying it expects more flight cancellations this week, so the backlog continues in the airline sector. OK,
coming up, we talked about tech a little bit already, but SAP gains on TradeGate as it gets a boost from its cloud revenue growth and AI demand. We'll take a look at how it performs when the market opens. That will get your stocks to watch shortly. Plus, as supports build, we will take a look at Kamala Harris's possible energy policies. Up next, we'll check in on the latest with the Trump trade. If you have any questions for our guests, please do get in touch. IB plus BBTV Go is the function to use on your Bloomberg terminal this Tuesday morning. This is Bloomberg.
Neither of them is going to be putting up taxes and cutting spending dramatically unless I've missed the scoop badly. So it's that the economy will determine. But in the period between now and the election, definitely there was a sense that Trump is putting policies in place which would tend to be sending the yen higher, for example, and are intended to weaken the dollar in some form.
That was SocGen's chief FX strategist, Kit Duke, speaking to Bloomberg just yesterday. Let's broaden the conversation. We're joined now by Eva Sun-Wai, who manages M&G's Global Government Bond Fund. And really nice to see you, Eva. Thank you very much for joining us. And we heard Kit there talking about FX markets and talking about the dollar. And I know that you will have views on the dollar as well. Help us understand how the politics interacts with the dollar here, because so many paths seem open from this point, because you can make arguments that Trump would lead to a weaker dollar. He and Vance have talked about that. There are other arguments that if there are tariffs and higher inflation, you get higher rates and then a stronger dollar. And then, of course, we might not get a Republican leader at all. It seems like the politics is nothing but complicating here.
Yeah, definitely. And, you know, I think it's a mixed story, and it's one where historically, especially in recent years, monetary policy has definitely dominated the FX story. Euro dollar, for example, has almost exclusively been driven by rate differentials. So it's definitely a more open question now with the political story driving so much of the uncertainty. As you say, it's unclear whether the Trump trade is for a stronger dollar or a weaker dollar. You could argue that given valuations, the dollar is already very strong. You know, whether we get a dovish Fed or even a just slight adjustment in policy, is that enough to really curtail the trend that we've seen of a stronger dollar? You know, the US exceptionism story is still there. The US economy is still holding up reasonably well, albeit driven by the service sector as opposed to goods. But broadly, you know, the dollar story is still looking reasonably stable for now. But obviously, the uncertainty on the political front is causing a little bit of weakness and causing a little bit more volatility in FX markets.
OK, so we maybe expect volatility. That's about as confident
I think
as we can be about what's going to happen from here in the politics and FX markets. What about where we stand on bond markets then? Because whilst we were wondering whether Biden was going to drop out of the race, we saw a lot of investors turning to Trump trades, increasingly driven by the polling, essentially. So we'll continue to watch the polls, continue to watch the betting markets. If Trump trades, maybe we have some idea what that might look like. Harris trades, does that look like the status quo? Do we just assume she's very much like Biden when it comes to fiscal spending and other policy areas?
I think when you look at that kind of FX versus bond situation, I think the bond markets are still very driven by that monetary versus fiscal element. You know, I think the Trump trade so far has been for a steeper curve, so to assume there needs to be more term premium at the back end, to assume that the supply picture will likely be more aggressive than it has been under Biden, or, you know, I think both of them arguably wouldn't be a great story for the back end of the curve and likely would still see some steepening. But then you've also got the element now of the Fed and, you know, cuts about 25 basis points a quarter being priced, perhaps more going into 2025. And actually, are we now overpricing the certainty of a cut in September, and therefore does that position for tactical flatteners going forward? So a bit like how the dollar has these push-pull effects, I would say the curve also has these push-pull effects.
So we lack conviction around a lot of things, I suppose.
I think the political story has really thrown up so much uncertainty, which we didn't necessarily have over the last, 6 months or so.
You know, and even in that environment where on every front no one quite knows what's going on, there's one place where there seems to be a real consensus, and that's on the pound and how this seems to be just the strength that is ongoing. And as someone who's very exposed to the exchange rate between the pound and the dollar, I'm loving that we're looking at 130 and 129 this morning, but basically 130. How long does that last? Is that a crowded trade right now?
I think it's definitely become more crowded over the last month or so. You know, I think the UK has somehow emerged into the stability story, right, compared to Europe and the US. You've got the volatility with the French elections in Europe, obviously. We've got the volatility with Trump and now Harris in the US. And now we've actually got a majority government in the UK. We're likely to see a reasonable amount of stability going forward. There's a mix in terms of, how they can generate the revenue they need to generate in order to grow. But broadly, the UK is now emerging as the stability story. And I think that is largely priced into the pound, but, we've continued to say the pound is overvalued and it's continued to perform well. And so, that trend may well continue. It's also compared to other currencies in the kind of G10, it's still one of the higher carry currencies, which is generally doing well in this sort of environment.
You know, it's interesting that so much of that, though, is hooked to that political certainty, right? It's the fact that we aren't expecting that sort of turnover in the UK. Does that change, though, as we start to get more insight on the budget story? We're hearing the commentary come out of the UK, especially as not just Rachel Reeves, but several others who are coming out and saying, well, actually, we've inherited more of a mess than we expected. And yet, in the face of that, you are still seeing strength in the FTSE, in the pound. What is the market missing here?
I think, if you look at what happened with Liz Truss, I think markets take some comfort that actually bond markets don't allow very reckless budgets, or, we will come out and say, actually, that's not acceptable to gilt markets. And even the Bank of England, to some degree, came out and obviously intervened once again and started bond buying. So I think markets take some comfort that, yes, they've inherited a high level of borrowing and they've inherited a large, they've already taken on a lot of taxes. So I think there's some comfort that they can't actually do that much more aggressively to, really accelerate the borrowing story. It will have to come from somewhere else, and there'll have to be an element of creativity in terms of where that revenue comes from, whether they target, tax evasion or target the, private schools or what they're talking about. But I think Rachel Reeves is careful to not put that budget in too soon.
So I suppose in a way you're taking that expectations management rhetoric and actually seeing it as a sign that they're going to be more fiscally responsible. But let's just turn to Europe as well. We're hearing, I think, in the next 35 minutes from Philip Blade at the ECB. We had such cautious messaging from Christine Lagarde at the ECB meeting. Are you buying that? Are you convinced that actually a September cut is on a knife edge, or do you think it's actually going to happen?
I think with June, they definitely backed themselves into a corner in terms of they essentially promised the market a rate cut. And I think they're cautious for the September meeting not to promise the same, given, we have time until the September meeting. There's definitely a lot of data points that we need to look at. We've got a lot this week alone. I think she was very clear to say that it's essentially wide open, that it will continue to be data dependent. And she's been saying that for a while, but I think she's very cautious not to overpromise that rate cut once again. But, last week was very much a non-event. So Europe seems to be quite quiet on the monetary front. It's all about the political story.
As Guy Johnson kept reminding me when I was reporting on it from Frankfurt, Ava Sun-Wai, great to have you with us in the studio. Fund manager at MNG, always great to have your insights. Coming up, as Kamala Harris looks to reunite the Democrats after a turbulent summer, we'll get the view from Peter Trubowitz. That's next. This is Bloomberg.
Even if Biden hadn't endorsed her, it would have been hard for another candidate to challenge Harris. Former Senator Joe Manchin has said that he might consider coming into the race. I know that there's been talk about kind of a mini primary between now and the convention, but I really don't think that happens.
If it is Kamala Harris, there are two VP candidates who I think would be very solid for her, both Senator Mark Kelly from Arizona and Pennsylvania's Governor Josh Shapiro.
Some of our guests there discussing what the possible VP options could be from Kamala Harris now that she does look to be, at least early signs, to be the presumptive Democratic nominee. Let's go right into it. Peter Trubowitz joins us this morning, professor of international relations at the London School of Economics. Around our table this morning, welcome to SET. Look, the news flow is coming at us very quickly. There's a lot of pressure. This week is make or break for Kamala Harris. But I'm curious what role her VP pick plays in all of this. Does it help bolster her case within the Democrats, with Republicans? How are you thinking about the VP conversation?
Well, I think for Harris, she's got two tasks. The first is to generate enthusiasm in the base, which I think she's already doing. I mean, she's now got a majority of the delegates, so delegates have come off and, come in support of her. Donors are just piling money in, dumping money in. The second task is she needs to convince moderate voters in the key battleground states that she's a credible candidate. And that's where I think the VP pick really matters. It'll be probably the first way for her to signal that she understands where the American public is, that she is a moderate, liberal Democrat. And so I look for her, as I think many people do, to pick a white male, perhaps a governor, maybe a senator, like Mark Kelly, to send a very strong signal, and this will either be done shortly before the convention or at the opening of the convention is what I would expect.
So let's bring it back to the governorships that are in question here. Mark Kelly, yes, as a senator, is certainly an option or a name that's been floated. Other names are Roy Cooper of North Carolina, Andy Beshear of Kentucky, both governors, both white males, both expected to help her solidify some of the polling that isn't necessarily working in her favor at that moment. What's the likelihood that she picks that as a kind of solidification of her campaign to make sure she is higher in the polls in North Carolina, in Georgia, in Kentucky?
Well, I think actually if you go down that path, she's most likely to go for Shapiro in Pennsylvania.
Despite the polling odds for Trump?
Well, I think if a Democrat cannot win in Pennsylvania and in Michigan and in Wisconsin, the Democrat's not going to win. So you can try to expand, and maybe she will, the electoral map to, as you're suggesting, Georgia or North Carolina. Kentucky, I think, is too far a reach.
Yeah.
And a very attractive governor who would help her in many respects within the kind of larger industrial manufacturing base. I mean, I think somebody like Mark Kelly in Arizona helps her where she's vulnerable to a Trump attack, which is on the border question. He's tough on that. He's very credible on it. She has to make a set of decisions about where she's vulnerable and who will help her on a particular issue. It is important to remember in all of this, the VP choice is important, but only so much. At the end of the day, it's the person at the top of the ticket.
Professor, I want to turn to foreign policy. And when Joe Biden has become effectively a lame duck, how real is the threat that you get an emboldened Putin and an emboldened Xi? Or on the flip side, do you actually get an emboldened Biden in his last 6 months?
Well, I think Biden is looking towards his legacy at this point, and I think he will focus on foreign policy issues. What I would look for him to be trying to secure as quickly as possible, I mean, he has been working hard on this, I think already, is some kind of ceasefire in Gaza, which would actually help Kamala Harris as well. Not to take that issue out of the electoral arena, it won't, but I think it would help there. There's always the possibility of some kind of October surprise where Putin is engaged in nuclear saber rattling, or she does something with respect to Taiwan. I think the latter is less likely than the former. These are kind of like the known unknowns. I think the known knowns are September 10th is supposed to be the debate between the presidential candidates, and September 18th is supposed to be the sentencing date for Donald Trump. So these are kind of events, I think, kind of in the short run that people are going to really focus on.
Well, in the very short run, of course, you've got the Netanyahu visit to Washington.
Indeed.
I mean, if you look back at Clinton, you know, he made his last-ditch attempt at Middle East peace months before that 2000 election. Does Biden go for something like that?
Well, I think right now Netanyahu's probably pretty unhappy because this story, his visit, is below the fold. It has completely dominated the news by what we're talking about right now. So, you know, I don't think Biden is good. They're going to be able to, apparently they're close to some type of deal on the ceasefire in Gaza. Netanyahu is under tremendous pressure at home from voters, you know, from average citizens, as well as the military to get some type of settlement there. You know, I think in general right now, a lot of Western leaders are breathing a sigh of relief that Biden actually will be able to focus full-time on basically foreign policy issues that concern them, or at least invest a lot of time in that, less in the campaign, and also that it's more likely right now that an internationalist, that is Kamala Harris, gets elected than it was if Joe Biden was running.
That's a really interesting prospect, isn't it? That in the run-up to a US election where things tend to get particularly domestically focused, actually this time around we see something different because the incumbent has a different role. Are you surprised, back to where we started the conversation, I suppose, Professor, are you surprised at how quickly the left is coalescing, I mean left, I just mean Democrats, are coalescing around Harris? Are you surprised?
I mean, it's faster than I thought. I mean, it is quite remarkable that in 24 hours she generated something like 81 million in donations. The delegates have all piled in. She's way over what she needs. And I think how quickly people took themselves at viable alternatives, like Gretchen Whitmer or Shapiro or Kelly, took themselves out of the running. On the other hand, I think what it speaks to was there was just an incredible appetite for some kind of a change here. I think it's, you know, I think what was important here in terms of the optics, but I think it's real, is that this was more spontaneous than it was orchestrated from the top down. I think it's significant that the Democratic leaders from Obama to Schumer to Hakeem Jeffries have stayed out of this.
Yeah.
I mean, Pelosi waited a while also before she committed to Harris. And I think that was to send a signal that this was coming from the bottom up, in a sense.
Which is one of her criticisms, right? The idea that she still does not have the endorsement of President Obama, for example, who behind the scenes has been reported to have pushed Joe Biden. Now, that's a longer conversation, Peter. But I want to very quickly talk about the other side of the aisle and talk about President Trump as well, or former President Trump. The idea that he is trying to advertise himself more within the Republican Party and as a candidate as a little bit distanced from the MAGA crowd that I think defined almost his very first presidency. Would you agree with that when given the allegations from Kamala Harris and some of his critics about the Project 2025 agenda, given that he still has to kind of win over the likes of Nikki Haley and Mike Pence and the more kind of conservatives of the Republican Party that are not associated with the MAGA crowd, the Mitt Romneys, for example? Would you say he's succeeding in that goal?
I think if he really wanted to do that, he would not have chosen J.D. Vance.
Was that not an appeasement of the MAGA crowd?
Well, I mean, what I mean by that is he was not reaching out to swing voters in making that choice.
Yeah.
To me, it was an indication that Trump believes that this race is going to be won or lost in those battleground states in the Midwest, that it's a kind of 2016 and 2020 replay. He won in one, he lost in the other, and that he has to secure those. I think if he knew that Biden was going to step down, I don't know. It's possible that if he knew that if Biden was going to step down and Harris was going to be the candidate, he would have made a different choice for VP.
Interesting. Who do you think it would have been?
Well,
out of curiosity.
He could have gone with Burgum. He had other choices that were kind of more swing type candidates. And I don't say, you know, the idea that he would have chosen Nikki Haley, that's a bit of a reach, I think, given all the bad blood and so forth, but between the two of them. But you know, by choosing Vance, he really doubled down on his political base. And so now he needs to find a set of issues, perhaps to reach out to the center. I think he is going to double down on the base all the way. That's the way they're going to try to win. They're going to try to generate support. The argument will be that Kamala Harris cannot win white male voters in the Midwest. And that's what they're going to try to prove.
Peter Trubowitz, too short of a time with you, but we thank you so much for coming on set. Professor of International Relations and the director of the Phelan U.S. Center at the London School of Economics. We thank you so much. Coming up on the program, we're going right back to the markets, the stock market and the stocks to watch, including SAP, the software firm posting an earnings beat thanks to its growing cloud revenue and increased AI demand for its services, the tune of 25%. We're going to dive into the story next. This is Bloomberg.
What you need, any industrial company or non-industrial company, you would want to have certainty, you would want to be able to plan. And when you see huge changes in politics and people potentially taking completely different directions than before, you are losing the ability to plan.
In the United States, we're seeing a lot of early stage innovation. In the UK and the EU, we're actually seeing the mandates drive scale. So suddenly we're in a space where some airlines are able to actually secure long-term offtake, long-term fuel supply for sustainable aviation fuels.
In the end, it's a disadvantage for any country if industry cannot rely long-term anymore on key decisions.
There's confidence in the market, and we can actually start scaling up sustainable aviation fuels. So they complement each other.
So that was some of our guests from the Farnborough International Air Show, and our very own Guy Johnson is at day 2 of the event. Guy, loads of fallout from the CrowdStrike IT outage. Hearing overnight Delta saying that it expects more flight cancellations this week. Are the airlines you're talking to on the front foot again?
Yeah, I think most of them probably are. Some of them weren't affected at all, Lizzy. It was interesting. Emirates saw absolutely no effect whatsoever. It didn't use the systems that went down, and as a result of which, flights largely left on time and arrived on time. But some airlines are still seeing that as a problem. And as we discussed when it happened a few days back, the legacy effect of these kinds of outages lasts a long time. You have crew out of position, you have aircraft out of position, you have passengers and their bags out of position. So it takes a while for it to work its way through the system and for everything to normalise. But that certainly was one of the big conversations on day 1 here at Farnborough. In some ways, it was actually quite good we had something to talk about because this is a quiet show. I've been doing these things for a very, very long time. I can't remember the last time it was this quiet. I can't remember the last time we saw this few orders. This is an industry now that is more focused on kind of how it produces aeroplanes than sells aeroplanes. And I think that's probably the big takeaway from Farnborough this year.
Yeah, Friday made getting planes from one place to another difficult. A lot of people watch Farnborough for the big orders then, Guy. That's, as you've referenced, will remain part of the conversation. But building the thing, whether it's Airbus or Boeing or anybody else, building the planes, getting enough of the right parts and getting your suppliers to supply the right things at the right time still seems to be a big challenge.
I was talking to Tim Clark, Tim Clark of Emirates yesterday, the president of Emirates, one of the biggest buyers of airplanes ever. And he was just scratching his head, had his head in his hands. He couldn't understand why this is an industry that hasn't managed to figure out how to sort its supply chain issue out. You got a pass for a couple of years after the pandemic, but it has persisted. And it continues to be a massive problem. And it continues to be something that this industry has to deal with. Nobody, I can tell, has actually managed to put their finger on why this has happened in the way that it has with this industry. I know the car sector's been affected. You look at what Porsche is saying today about its numbers and its supply chain. But the aviation industry, the aerospace industry, has been one of the areas where we have seen the biggest effects of this supply chain problem, and it is by no means over. That's why there are no orders here, Anna. There are no orders here because you can't get an aeroplane for a very long time. These companies are sold out for a very long time, and they're struggling to build the kit that's already been ordered. And that's the narrative that continues to dominate.
Well, Guy, you've had a series of guests, a range of guests, I'd say, from senators to, of course, airline CEOs to sustainability officers, et cetera. How much pressure is there right now, given the political landscape, to meet some of those sustainability targets, given the political atmosphere in the States, given maybe a little bit of pullback on that front in Europe? What's the conversation?
So the conversation is still that this is very important. This is an industry that has set itself targets in some ways that are very difficult to achieve, and we are in some ways not there yet by any stretch of the imagination. We don't necessarily have the technology, we don't necessarily have the fuel to make this happen. These are challenging targets that have been set by the aviation sector in order to meet the 2050 goals. Getting there is going to be really, really difficult. Yes, there is positive news coming through on sustainable aviation fuel, but as you mentioned, Kriti, the story in the States, you listen to Donald Trump, you listen to the Republicans talk about the oil industry. The oil industry at the moment is not focused on meeting this challenge for the aviation sector. It's going to take a lot of effort to make that happen. And the IRA, the Inflation Reduction Act, was a big step along that road. Does that continue? Does that money continue to flow, I think, is a key question. And then I'm going to be talking to Guillaume Faury of Airbus in just a few minutes' time. When do we start to see the next generation of aircraft? When do those start to come into the market? Because that potentially could have a big impact as well, and that potentially could be something of a game changer. But yeah, these are difficult targets right now to achieve. The aviation sector has set itself kind of some very elevated targets. I have to say the tone here is that those targets are a long way away right now.
Guy, thank you very much. Bloomberg's Guy Johnson at the Farnborough International Air Show, very accustomed to delivering reports around the aviation sector with noises off supplied by jet engines in the background. Joining us now, let's turn to the market story. And joining us now, managing editor for FX and rates across the US and EMEA here at Bloomberg, Rachel Evans, with thoughts on the markets in 3 minutes. Rachel, nice to have you with us. We were talking to a guest earlier who was talking about UK assets as a haven. I know your team has been writing about that theme with investors. And in fact, Rachel Reeves, the Chancellor, has tried to pitch the UK as something of a haven of stability in amongst a sea of uncertainty politically. What are we seeing in the pound then, and how does that fit into that picture?
Yeah, well, it seems like that pitch is very much working from a pound perspective. We've really seen the pound going on the most incredible run this year. It is beating 92% of other currencies around the world, which is really, really crazy when you think about it. All of that, of course, beating the G10 as a result. Including the dollar. So I think when you kind of look at what the causes of that are, there is an aspect whereby, you know, the incoming Labour government is projecting this sense of stability, is projecting this sense of calm, particularly when you compare it with some of the UK's sort of most, I guess, kind of interesting peers. France, obviously, just on the other side of the channel, clearly been kind of caught up in a lot of political chaos recently. The US also having some interesting political developments. So the UK is very much kind of sort of standing out, therefore, as something that is calm. But I think the bigger picture sort of beyond that political aspect is really very important, which is that the Bank of England is likely to remain on hold for longer than the Federal Reserve. And that's what we're seeing kind of, you know, traders sort of pricing for at the moment. There's really very little chance that we'll see a cut in August. It's about 30% priced by traders at the moment. So we're looking at kind of September or even November for that cut. And that's something that is very supportive of the pound. So we saw it hit sort of a one-year high last week, and we've seen bets on further pound strength really continuing to grow. That, however, has me slightly worried. Whenever you see everyone piling into one trade, there is a risk that things start to look rather crowded, look rather stretched. And given we now have record bets, you know, on sterling to continue to gain, that's a point of some. It's worth watching, shall we say?
Well, let's talk about the other side of that trade, which of course is going to be the dollar. Is the dollar positioning story relevant this early ahead of the election, or is that something that's in the back burner?
I think it is relevant, and I think, you know, there's been a lot of conversation about whether, you know, sort of the election is a dollar positive or dollar negative trade, and I think that's going to depend a bit on who ultimately takes the presidency. Given we have uncertainty kind of going into the November elections, buying dollar has kind of been a very sort of popular haven-esque trade. When we actually get past the election, depends on who comes out as the winner. Trump has obviously made some quite concerning comments for markets about whether he's going to continue pursuing a strong dollar policy, potentially leading to weaker dollar. But his his policies that he's actually been talking about are much more inflationary, which would typically be a sort of stronger dollar vibe.
And just briefly, Rachel, do tech earnings, that's going to be the big focus in the next 24 hours?
Yeah, we've got Tesla reporting, we've got Alphabet reporting. Given we had a lot of issues with tech stocks last week, S&P 500, there's a lot of doubt about whether it can continue to keep powering higher. I think everyone's going to be watching to see kind of how Tesla and Alphabet really come in.
Whether they really deliver. Thank you very much. Thanks for joining us. Rachel Evans, Managing Editor for FX and Rates across the US and EMEA here at Bloomberg. Let's get stocks to watch. Lizzy has a breakdown.
Well, we were just talking about earnings there with Rachel, and let me take you to SAP because they are one to watch. We have had the second quarter results earlier out of Germany, and cloud revenue rising 25% on the strength of AI demand. So SAP one to watch at the open. Also Porsche, bad news on top of bad news for them ahead of their half-year results tomorrow, but cutting its full-year revenue forecast on an aluminium parts shortage because of flooding at a supplier. So keep an eye on Porsche. And finally, Julius Baer naming a new CEO to join in 2025. This is Stefan Bollinger. They've tapped him from Goldman Sachs, all part of this strategy to rekindle their growth ambitions, frankly. So we'll keep an eye on whether the market likes this new name for Julius Baer at the open.
Thanks very much, Lizzy, with the latest on the stocks to watch. We will be back. We'll check in on all of the stocks that Lizzy was mentioning there. In terms of the futures picture then for European equity markets, we are expecting to go a little bit higher at the start of trade. Could London underperform? Interesting moves in the copper market and copper pricing. We'll get a read on basic materials for you. US futures pointing a little lower this morning, though. This is Bloomberg. Welcome back. A few minutes to go until the start of opening trading then for this European equity session. Let's have a look at the legacy then, Kriti, that we have from the US markets. This is the European story in the blue here, and you can see that at the time that Europe closed, the US was kind of on its low for the session. So we do have a little bit of natural upside coming through across the Atlantic for European stocks today. So we could see some of that. Will that be limited, though? I mentioned before the break how copper prices have been in retreat through the Asia session, and that sometimes weighs on the London market. So we could see something a little bit different there. But this is the focus right now then. How much do we continue to see appetite, risk-on appetite for tech stocks and the wider stocks universe? As we saw in the United States yesterday, it was big caps, it was small caps. Everything seems to be rallying, Kriti. How much is that the story in the face of all the earnings news we are set to get? Yeah, well, I think the fact that the London market is such an international market can be both a blessing and a curse, Anna. To your point of doing that detective work, as we look at futures trading right now, down about 0.4%, but that is a stark difference between the outperformance you are seeing on the Eurostoxx 50, higher by 0.4%. That is almost a 1% differential, Lizzy, especially when we're talking about underperformance in the States as well. I think maybe the question might be, instead of what's going so poorly in London, what's going so great on the continent? That's what we're going to be watching at the open.
Yeah, we should add into our stocks to watch that the European chip stocks might also be in focus today. This is after NXP Semiconductors issued guidance for the third quarter that came in below estimates. So do keep an eye on the European players, the likes of Infineon, ST Micro and Melexis. But we also already mentioned SAP, Porsche and Julius Baer, Anna.
Yeah, absolutely, all in focus. So you've mentioned a number of reasons why we keep an eye on tech. Backward looking, the numbers from NXP overnight, the SAP numbers that unexpectedly, I think, dropped last night, or at least a taster of them. More further numbers to come from some of these European corporates in the days and weeks ahead. But we've heard a lot from the tech sector, a lot to hear from the US tech sector still to come from here. Certainly we'll focus in on Alphabet as we go through today's trading session. This is what we have then for Europe. As expected, a little underperformance in London, still early days and not by much, but down around 0.1% so far. The IBEX is also open and pretty flat this morning. The Stoxx 600 then has enough to go on and jumps just 0.1% at the start of trade. So it does feel as if it's a day where we could see some divergence across these European equity markets. US futures have been pointing a little bit lower. Yesterday we saw that bounce. We saw that appetite for all kinds of risk assets, just a little layer of political certainty to go on top of a whole layer underneath of uncertainty in US politics. And perhaps that was just enough to make those stocks rally yesterday. So we saw that in yesterday's session. Today then we see US futures pointing a little bit lower, and with all of that as the inputs, this is what we have across European equity markets. So real underperformance then coming through in London. Is that going to be an earnings story? Is it very much connected to the basic materials, the iron ore price, the copper price, all of that in focus through the Asia session then? Kriti, what do do you see in a deeper look at these stocks?
Yeah, and I think your guess was spot on here, because when you look at that commodity read-through, that is the exact weights that you were seeing in the FTSE 100. Glencore, Rio Tinto, for example, pulling the market lower. You're also seeing the likes of BP and Shell also pulling the market lower. So that commodity story really magnified when it comes to the UK index story as well, despite the fact that if you look at copper prices right now over in Asia, they're only down about 1%. So again, perhaps this is just more of a risk sentiment story than anything else. To the upside, though, you are seeing some of the banking stocks higher as well. I'm sure curious how much of that, at the end of the day, Lizzy, is a little bit of a rates play. AstraZeneca as well is one of your biggest weights on the UK index as well. But we had a couple of stocks that you were keeping your eye on.
Yeah, I would just say travel and leisure top of the basket when it comes to the sectoral outlook. So a bit of recovery after the outage, perhaps for the airlines, higher 0.5%. But yeah, I was keeping an eye on SAP, and they are indeed up 1.2% this morning. We were mentioning about their second quarter results earlier, boosted by that AI demand. I also told you we should keep an eye on the European chip stocks off the back of that NXP Semiconductors guidance for the third quarter below estimates. And indeed, Infineon, STMicro and Melexis all in the red by more than 1%.
Norsk Hydro certainly in focus. That's a slightly different story to the other basic resource stories, but it is a company that has disappointed this morning, and that stock is down by 4.6%. Should we go to SAP and what's happening there? Because we were expecting some movement from this business, their ability to roll AI into their cloud offering, seemingly something that can deliver from them, but we're waiting for an opening price on SAP.
We are waiting for an opening price. Remember, that is listed on the German index, so that takes a couple of minutes still to open up. So we're going to keep an eye on that as well. But when you look at perhaps the kind of other companies that may serve as a little bit of a proxy, I'm not actually seeing much of a read-through into the likes of ASML as well. Even though they are two fundamentally different businesses, they do tend to trade quite similarly to each other. But again, yes, no opening price there, although I am seeing outperformance in ASML, and I would starting to see early movement in an SAP now. It looks like it is higher by a whopping 5% this morning, contributing to the upside on the stock 600 just now. So we, of course, are going to keep you apprised. Again, it looks like the tech sector is now moving higher. SAP and ASML both higher, but we're still, again, waiting for a little bit more of that volume to see how that all shakes out. We'll leave it there. There's a part of that conversation as well when it comes to the tech space is also going to be showing up on both sides of the Atlantic. Remember, there is a question not just of the earnings, but also a question of valuations. If you're starting to see this massive AI demand, what is the entry point for that on both sides of the Atlantic? We asked an equity strategist this very question yesterday. Take a listen to what he had to say.
The 12-month forward PE in Europe, I mean, it's at around 15 times or so, maybe a tad higher. But in the US, even if we exclude the Magnificent Seven, we are at around 20 times. So I would think that there will be some sort of convergence in valuations going forward. Not saying that Europe should see a massive re-rating, but mostly that the US will probably see a de-rating as the cycle is slowing. And then...
So that was Wolf von Rotberg, equity strategist at J. Safra Saracen, speaking on this show yesterday about convergence between US and European valuations. And we can discuss further with Bailey Wakefield, multi-asset portfolio manager at Aviva Investors. Great to have you on the programme, Bailey. I wonder if you agree with what you heard there from Wolf on the convergence between US and European valuations. You've been very positive on Europe, especially on the banks.
Yeah, overall, we have a market-friendly environment. We believe we're going to be avoiding a recession, and we have inflation coming down. So that's a good story for markets overall. And for the US, we are seeing that bad news is good news. So on the growth side, we're starting to see that come down a little bit, and that's providing a little bit of boost to the equity names. But on the European side, I mean, it's been completely dominated by politics recently, but we believe that Europe's at a cyclical low point and we'll be seeing some improvement from the earnings side.
When does bad news stop being good news for markets?
That is the question that we're all trying to answer, right? It's going to be how bad does that news actually need to be to start to see that turnaround?
Can I pick up on the banking sector? Good morning to you, Bailey. Can I pick up on the banking sector? Because as Lizzy was saying, the banking sector has been something that you have liked. And if... What is your expectation there? Because some people have said as rates start to be cut, maybe they stop benefiting from the things that have driven net interest margin, for example, over the last couple of years as rates were rising. But then others focus on the fact, well, yeah, rates might be cut, but they'll still be higher for longer versus history, versus post-GFC history. So what's the sort of big picture around the European banking sector?
Exactly that. We are envisaging a world where we are not going to go back to rates that we saw, you know, that we've had for the past 15 years, basically. We're in a new environment where rates are so much higher, and that's going to benefit the sector. I mean, even if we do see a few cuts, if that's going to help economic growth, that will still benefit the sector.
And another one of your picks is around the Japanese market as well, and structural reform. And last year we got a lot of investors talking to us about this structural reform and a number of other drivers that were pushing them more towards the Japanese equity story. Has that still got further to run, do you think?
Yes, we believe so. Definitely the corporate reform story was pretty huge in Q1. But then as other factors come into play, we had the yen, more talk about central banks. That kind of corporate reform story got pushed to the side a little bit. But we think there's still a lot more to play for there. You know, we may have picked the low-hanging fruits, but there's still a lot more to go.
Bailey, hold on for a second. I just want to get a quick market check on some of these major stocks that we're watching. S&P now pushing that rally higher, almost 7% so for some of these initial trades. To the downside, though, you're seeing Porsche down about 3.6% as well. So really a two-tail of German stocks that are then really showing up in the stock 600 as well. It is still that tech outperformance and the mega techs that are pushing the stock market higher. But I want to bring it back to that story here. This idea that the large caps in Europe may be leading when we see a broadening out in the States. Is that a problem? When do we see that expansion in the States show up in Europe?
Yeah, I think overall market participants would really like to see the overall broadening in participation. I mean, over the past few weeks, we've seen quite a few swings from large cap names outperforming, switching over to small cap. We are seeing markets move around a little bit there. And that's more because markets don't like uncertainty. And what's happening in politics at the moment is bringing that uncertainty to markets.
Is that something you trade, though? I mean, over and over again, so many people are saying, well, it's unclear what the policy agenda is. I'm uncertain how much clarity we get in the next 3 months. Does that mean not trading that or not trading the assumptions kind of leaves you out in the cold?
I mean, I believe that those short-term changes kind of give you opportunity sometimes, but we really do focus on that long-term fundamental picture rather than the volatility that you get through politics. So, you know, some players in the market may be able to take opportunity if they have the right liquidity and sizing to be able to do so, but we focus on more of that long-term fundamental picture.
We talked a bit about the SAP earnings this morning, Bailey, and I know Kriti was just mentioning, and there does seem to be talk, you know, that's a story about AI and how they can bundle that into the cloud and sell that to customers. Interesting thinking about where AI goes and which sectors it goes into, because you have a preference for US healthcare. You've got you favour US healthcare, and to Kriti's point, you know, a lot of people think that's about the politics, but actually you say it's about AI, it's about technology, it's about something bigger. Explain that a little more.
We try and look at healthcare on a beta-adjusted basis. So we are looking at the sector rather than its more kind of defensive profile. And we believe that the pandemic has helped to almost revolutionise the sector. We have seen drugs come through at a much faster pace. Regulation is starting to change. We have AI on top of that. So we believe that there's going to be more opportunity coming through there.
So that's the tech side of the story. Then if we're still talking about fundamentals, right here in Europe, it feels like the focus still needs to be on manufacturing, which remains fairly weak. You're seeing that in Germany. You're seeing that in France, arguably Italy as well. Spain has its own kind of weird outperformance story, so I'm not going to map that in. But the manufacturing story in Europe is weak. And I'm curious when that shows up in some of the fundamental underperformance, when on the equity market, on the bond market, we're still seeing green on the screen, France aside, on the bond market.
Yeah, I think the overall main picture there is that it will take a little bit of time for that to start to come through. Market participants are going to be keeping their eye on the data as they have done for quite some time, and they're going to be quite data dependent. So that's something that we're going to be needing to watch going into the future.
OK, Bailey, thank you very much. Bailey Wakefield, a multi-asset portfolio manager at Aviva Investors. Thank you very much for joining us. It's an interesting session, isn't it, Kriti, when we look at what's going on these markets. We've got last week's story was all about rotation away from those large tech names, many of whom we're going to hear from shortly around earnings stories. So we could see another pivot in the story. And it was about piling into small caps. But the small caps, even that trailed off towards the end of last week. Yesterday, there was just enthusiasm for everything. Today looks quite mixed here in Europe.
Yeah, it is an interesting one. And this is why it comes right back to this idea of kind of small caps versus large caps, because you were talking about the breadth story as well. And then you look at some of the healthcare names, for example. When people look at equity performance, Swiss equities come into play quite a bit. The Danish equities around like the likes of Novo Nordisk, Novartis, et cetera, keep coming into focus. I think that means that we have to check in on the Guy Johnson sensational six. 6 or the Kriti Gupta core 6, if we will, because that, I think, really highlights the story that we are starting to see when we look at those heavyweights. Novo Nordisk, for example, outperforming higher by 0.5%. Schneider Electric, it looks like getting in on that AI theme that we saw in SAP as well. ASML, from an index point of view, is helping lift the index, but it isn't exactly driving the gains as perhaps it has in the past. Your underperformers, though, Ferrari down by just 0.1%, and Nestle.
It's interesting looking at the likes of Schneider Electric, because we've talked many times about that kind of business being a beneficiary of electrification. And we saw Goldman Sachs has put out an index of those companies that do well or that outperform under a Democratic presidency and those that underperform. And yesterday we saw those that are set to outperform under the Democrats do well. And so it was a day where markets readjusted just at the margin, even if we didn't see big moves in the dollar or treasuries. They did adjust at the margin to slightly changing expectations around where we go. And this, I think we've got this Goldman Sachs basket. They don't tell us, interestingly, exactly what is in there, Kriti, but but it tells an interesting story.
It does on the stock front, even though on the FX front 24 hours ago on this very show, we were having a conversation around the FX front. You saw a bit into havens. You saw a move out of the yuan, a move out of the Mexican peso. So arguably FX is looking at a Trump trade, whereas the equity market may be looking at a little bit of a Kamala Harris trade. So that is your macro story. Let's get some of the individual stocks on the move. Lizzy Burden all over it this morning. Lizzy.
I just want to take us right back to tech, to AI, Kriti. SAP, you were talking about, and it's up 6.8% this morning off the back of those strong second quarter earnings boosted by AI demands. 25% up for cloud revenue, in line with estimates. So this is one of the stronger performers this morning. But if we flip over to Porsche, as I've told you, bad news on top of bad news for the car maker. We had its half-year results tomorrow, but yesterday we already had the news on its EV outlook, abandoning its sales ambitions there because of the lower-than-expected momentum for Europe and China. And then today announcing that they are seeing potentially a shortage of parts for aluminium because of flooding at one of their suppliers, and therefore cutting its full-year revenue forecast because of this shortage. So Porsche shares not liking it this morning, down nearly 7%. Also, let me take you to Julius Baer. We've had the news about the new CEO stepping in from Goldman Sachs. This is Stefan Bollinger. He's currently co-head of private wealth management for the EMEA region at Goldman. He's set to join in 2025, but it really illustrates this kind of strategy to move away from that Benko scandal and rekindle the company's growth ambitions. So good news for Julius Baer there. Just finally, let me take you on to Banco Sabadell. They also had their results this morning. Profit and net interest income beating estimates. You can see they're up this morning by 1.2%. It really does bolster the CEO's bid to avoid that hostile takeover. Our Spanish correspondent, Kriti Gupta, I know you were all over this, but it was, of course, that bid from BBVA, the Spanish rival, and the leadership looks to boost the share price to head off that bid, which, of course, it sees as undervaluing the firm. So good news for Sabadell this morning.
Lizzy, I'm so glad you brought up this story. You know I'm going to lean right into it, take any opportunity to comment, because one of the kind of pieces, one of the pieces of pushback in this deal from BBVA is that they just don't think they're worth what BBVA is offering them. And BBVA has been very vocal about saying this is as sweet as the offer gets. But one of the reasons Banco Sabadell is so confident in saying no is because of what Lizzy just outlined, the fact that they just see their stock price rising and rising and rising, and therefore adding more value than they claim BBVA can offer.
It's the perennial question when you're the bid target. Do you accept it, or can you do better on your own with your own management? You mentioned an offer we've seen in the cybersecurity space over in the United States, and their management again choosing to go it alone, thinking they can do better with an IPO.
Who says no to $23 billion? I've never had that offer come my way, but apparently they're saying the Wiz as well, the cybersecurity firm, can do better, and they can do better via the IPO market at a time when the IPO market isn't exactly roaring.
Yeah, it doesn't happen every Monday, especially with a lot of political uncertainty in the air. We will return to some of these corporate earnings stories shortly. Coming up on the programme, Porsche blames a shortage of aluminium parts and factory flooding for its cut to full-year revenue forecast. That is having an impact, a downward impact on the stock, down by 7.6% right now. We'll discuss that next. This is Bloomberg.
Q2 20% of the deals customers paid directly for AI, and it influenced actually every single deal in Q2. Take ExxonMobil, one of our largest customers now in the cloud. They are moving towards renewable energies, and our software is key for that. We are actually also making sure that the AI Copilot can screen, millions of contracts. There is no data entry anymore into an SAP system. We expect actually a triple-digit million number of cost savings this year.
The SAP CEO, Christian Klein, there speaking to our very own Tom McKenzie earlier on Bloomberg Television. It's interesting that he's talking about that ripple effect that you were seeing. It's not just about AI. It's about things like even ExxonMobil hopping into renewables has that AI read-through in it, moving the shares by over 6%. Not the Exxon-specific story, but the fact that SAP is talking about 25% of a rise in revenue just on the AI demand. Just when we thought, Anna, that we were running a little bit out of that steam on the AI story, SAP proves us wrong. How much of this is a microcosm for Alphabet later today?
Right, well, we're looking for areas where AI goes next, aren't we? We all know about the NVIDIA trade. Everybody knows about the NVIDIA trade. So looking for evidence of which other parts of tech it goes to, which other businesses it goes to. We're getting a sense of that from SAP, perhaps. A good morning for SAP, then. Not such a good morning for Porsche. It's in the red this morning after the German car maker had to cut its full-year revenue forecast, saying a shortage of aluminium parts could cause it to stop production of some models. Let's get more. Bloomberg's Craig Trudell joins us this morning. Craig, good morning to you. I have it on good authority that one analyst this morning said, when it rains, it pours, and it's that kind of moment for Porsche. This in connection with flooding at one of its suppliers.
Yeah, this is likely a supplier called Constellium. That we haven't heard from Porsche itself citing that company, but we do know that they have referred recently to the fact that flooding has disrupted their production. And in the case of a company like Porsche, your volumes are smaller. You likely have a bit of a narrower supply chain, where a company like Volkswagen or Stellantis would be, have multiple suppliers of particular parts. It may be the case that a disruption at one supplier could significantly impact their production and therefore have a more significant, impact to their earnings. That being said, this is also a company that I think, as was alluded to before the last break, has had serious issues in China, and that's, this is very much a rains it pours moment for them.
Well, speaking of China, let's talk about the biggest EV player in China, and BYD in particular. Warren Buffett's Berkshire Hathaway pulling back out of their stake in BYD. Can you explain the logic there? Why now? How much?
I mean, this was a hugely successful bet for Berkshire. I mean, there's a lot of positive stories over the years of them picking the right name at the right time. BYD, they absolutely put that company on the map. I don't think people knew what BYD was. It was, interestingly, a company that was supplying batteries to phone companies, the Nokias of the world back in the day. Berkshire Hathaway, it was a massively successful bet. It's been, they've been taking profit, and they've taken an awful lot of profit, because this is a case where, the stake was above 20%, is now below 5%. So we'll actually get a little bit less of a sense of just how much more Berkshire sells to the extent they want to continue to take money off the table here.
You know what's so fascinating is every time I hear BYD, I'm reminded of an interview that Elon Musk did with Betty Liu way back in the day on Bloomberg TV, where Betty asked him, what do you make of BYD? And he laughed it off as not a threat. Years later, Lizzy, we're not talking about Tesla losing, I believe, less than 50% of market share in the States now. BYD's only getting bigger, to Craig's point.
Yeah, don't underestimate BYD. I just want to bring it back, though, to, you've had this pessimism on EV sales that you highlight from Porsche. Tesla going to give its outlook later. What are we going to look out for in these earnings after the close?
Yeah, I mean, I think, going back to the earlier discussion of, the NVIDIA trade and SAP, I think Elon Musk is really trying to make Tesla, the AI company to bet on. This is not a sort of Johnny-come-lately story. He's been talking about AI for a long time. He's been, making predictions about self-driving cars. Those have not panned out, as we know. That being said, he's been hugely successful in, turning the stock around. This was a stock that was down more than 40% at one point this year, has come all the way back. It's now back into positive territory. And that's despite the fact that the underlying fundamentals of this company have continued to deteriorate. So earnings and revenue are not expected to be particularly strong. We do expect actually a decline in both earnings and sales. That being said, he has very much changed the narrative and the point of emphasis for the company.
Robo-taxis, Craig, you mentioned them. Let's go there. I mean, is this what drives and excites Tesla investors these days? I was reading something about grades of autonomous and the extent to which these robo-taxis will be autonomous. I didn't feel like that would be something that would need to be on a continuum, but apparently it is.
It is, and it's also the subject of great debate, whether or not the sort of nuances are captured there. So a lot of us, automotive nerds very much enjoy, the metrics of this. Yes. That being said, I mean, I do think the robo-taxi event that was scheduled for August, Bloomberg reported this month that it will be postponed. Just last week, Elon Musk did confirm that he had given the teams working on the prototypes, and I should emphasize prototypes here, do need more time, that he asked for a change to the front end of them. I do think that, one of the big questions here is just how close we are to these really actually being ready for the road. And also, how ready are they? Are they going to be, ready for sort of generalized autonomy where they can go anywhere, do anything? As we're alluding to here, the sort of levels of automation, that is a huge distinction and has been something where Musk has very much carved out a position very different from the rest of the auto world, where everybody else, to the extent they want to put fully driverless cars on the road, they confine them to a designated area. Musk has said, we won't have to do that. We'll be able to do generalized autonomy. And I think there's a lot of skepticism that he'll be able to deliver on that.
Craig, I feel like I'm in a sci-fi movie this morning. We're talking about AI. We're talking about robo-taxis. I feel I should also lean in. Yeah, and we've got the space set as well. We should talk about humanoids as well. This has come up quite a bit with Tesla, talking about making this in limited production internally. It's also, explain this to me, because it's supposed to help with car manufacturing, but also not.
Yeah.
Tell me about humanoids, Craig.
Yeah, Optimus is the name of the robot within Tesla. Interestingly, just in the last couple of years, they had a human in a robot suit, performing for a quote-unquote reveal. They have made some serious progress there to where they've filmed some stunt videos, but I think there are some real questions as to, again, market readiness. And I think Musk himself has alluded to the idea of, for the time being, we will put these to use in sort of limited fashion within our own facilities. He's talked about them sort of, traversing the halls of Tesla's offices at this point. Whether or not they're going to be, ready for Tesla to actually sell is an open question, but that hasn't stopped him from...
That's a lot of projects.
Yes, and that hasn't stopped him from really throwing out some crazy off-the-wall numbers at the annual meeting in the last few weeks about the potential of where this business will go.
Well, it's interesting. There's a lot of products, but it feels like these are all legs for Tesla stock to continue to rise. Craig, we have to leave it there. Bloomberg's Craig Trudell, we thank you so much for walking us through a little bit of everything. I don't even know how to wrap that. We thank you so much. Coming up on the program, we're going to stick with the automotive space, or at least the transportation space, I think is a better way to put it. We're back at Farnborough Airspace. Guy has an interview with the CEO of one of Europe's biggest plane makers. That coming up next. This is Bloomberg.
Welcome back to the opening trade, 30 minutes into our trading day. And this is the picture we have for you across European equity markets. The Stoxx 600 down 0.1% or so. The FTSE 100 really underperforming. We've got some weakness coming through in some basic resources stocks this morning as a result of some weaker metals prices. And so that's part of the reason there. The DAX actually benefiting from SAP going higher. The other story out of Germany is Porsche, of course, under pressure, cutting its sales guidance. But SAP is the source of the green today. AI boosting its cloud sales, and that seems to be something that lifts that particular business. You can see Glencore in the red, Norsk Hydro also in the red after that business disappointed with its earnings. Let's move on to the aviation sector. Delta Airlines says it expects to cancel more flights this week as it tries to recover from a crippling technology outage. Delta cancelled more than 800 takeoffs yesterday, bringing its total since Friday's meltdown to more than 4,600. Other airlines have got operations back on track more quickly, but the chaos has highlighted vulnerabilities in the sector. Let's go back to Bloomberg's Guy Johnson, who's at the Farnborough International Air Show with an important guest on the aviation sector. Guy.
Good morning, Anna. Yeah, welcome to a blustery Farnborough here in Hampshire. The rain hasn't arrived, which is good, because we're standing outside Guillaume Faury. He is the CEO of Airbus. Guillaume, always a pleasure.
My pleasure,
Thank you for joining us this morning. Look, this is an air show. Normally, you and I spend our time in these conversations talking about the big orders you've managed to achieve. Where are they this time? This feels like a quiet show.
It's a quiet show in terms of orders, but as you know, we have large backlogs. And we have by far more demand than supply, so the challenge for us is being able to ramp up, to produce, to deliver, and there's a lot of conversations around those themes.
How frustrated are your customers about where we are right now? Kind of, what are they telling you? What are those conversations behind the closed doors looking like at the moment?
Well, it's not behind closed doors. I think they're quite vocal on the fact that they need the planes. They need us to do the ramp-up, to deliver our planes. They have a strong demand. So it's a quite unique situation for them, and we are not completely able to satisfy their expectations. So that's the priority for us. Work with the supply chain, find the ways to de-bottleneck the places where we have difficulties. It's here and there, and that's something that takes a lot of time, a lot of energy. But we're moving forward. We are ramping up. Not exactly at the pace we wanted, but not far from.
I was talking to Tim Clark yesterday of Emirates. Tim Clark, he was struggling to understand why this industry is still not able to manage its supply chain story. You get a couple of years after the pandemic as a pass, but actually, why are we still here? Why are we still in the situation where the supply chain is causing the issues? What is it unique about this sector that is causing this to happen?
Yeah, I think it's important to remember what happened during the pandemic. We had to reduce very significantly the production rates. And part of the supply chain was idle for 1, 2, 3 years sometimes. Then restarting this supply chain post-pandemic and going from a rather low level of production to a much higher in a short period of time is difficult. A lot of skilled people have left the industry. We have to hire new people. The supply chain has to hire new resources and train the people, educate them, qualify them on the job. At times of inflation.
So it's still a people issue. It's not. That's where the problem largely
There
lies.
are multiple problems, but I think bottom line it's about onboarding people, training them, and ramping up the quality, the safety, and the quantity of what we're doing at the same time. And that takes time. We have thousands of suppliers, and when you have just a couple of them, few of them that are late on the ramp up, well, that's slowing down everybody, and that's what we've been facing earlier this year.
How much longer does it last for?
It will last for a few years because we are in this ramp-up. So we are trying to find a good balance between the very strong demand and the ability of the supply chain to do the ramp-up. So we're pulling as much as we can, but we have to be reasonable on what we do and adapt to the up and downs that we're seeing in the supply chain. That's what we're doing.
Porsche this morning flagging shortages of aluminium. You've not got shortages. You talk about the labour. There's not shortages elsewhere. You're not short of materials. You're not short of...
We had earlier last year and the year before issues with... raw material, that was more steel for our industry last year. On aluminium, we've been okay. I'm not aware of any shortage of aluminium for aerospace at the moment, but we have to monitor those kind of things. It's not just aerospace that is ramping up. We have other industrial sectors and sometimes ramping up in certain mix of raw material, of activities, of equipment. We had 2 years ago the crisis on the microchips that was resolved 2 years ago. So it's a very dynamic environment. It's volatile, a lot of changes, international disruptions, and we have to navigate those challenges.
You talk about the strong demand that your customers are seeing right now. We're starting to see signs of that demand beginning to slow down a little bit, particularly in the short-haul market. You're seeing it in the United States. Ryanair yesterday out signalling it here in Europe as well. You've been pushing your narrow-body fleet to a position where you think you'll be able to produce 75 aircraft a month. Is 75 going to be necessary? If demand slows down more significantly, do you think you're actually going to need to get there?
Yeah, for us, the need to go to 75 remains. We have by far more demand than our ability to supply on our single aisle. So if there is a bit of softening of the market, that's no problem for us. We would be able to advance a bit of the planes that are on demand. Today we have to refuse orders because we are not able to deliver in the time frame that is requested. So we feel rather protected, if I may say so, from those up and downs of the market.
In terms of that narrow body, the A320 family, you've brought here to Farnborough the XLR. Just been certified, huge step forward for the company to be able to signal that kind of box has been ticked. What next for that family? This is the core of the global aviation sector. What comes next for that sector? Are you going to change the wings on the aircraft, make it more efficient? Are there incremental changes you can make to that family?
I like your impatience, Guy. But when it comes to the A320 family, we have a new member in the family that is the A321 XLR, as you said, and that brings us close to the wide-body business. It opens a lot of new possibilities for airlines, and the challenge for us now is not very much on the product, it's on the ramp-up of the production system. That's why we are building additional final assembly lines. We are transforming the production system from A320 to full A321. We will have 10 final assembly lines for the product around the world, 2 in the US, 6 in Europe, 2 in China. So that's what's next on the agenda for us. It's really ramping up the production system and delivering those planes.
I've been asking this question for the last few years, but I actually feel now we're at the point where we might need an answer soon. And that is, when does the 320 family life cycle come to an end? When do you think you have to make a decision if you're going to get the next generation, the much more fuel-efficient next generation of narrow bodies into the air by, let's say, mid-2030s? When do you need to make that decision?
So actually, we're really in that phase of developing the technologies for the next generation, the product that will replace the A320 family. We want to be able to make the decision by the end of this decade for an entry into service of the successor in the second half of the next decade. That's the time frame.
So by the end of this decade, you have to make that decision. By 2020,
we want to be in a position to make that decision. Then we will adapt with the situation, with the environment at this very moment. But as you know, we're committed to decarbonization of the sector. We want to be carbon neutral by 2050, and we believe that the successor of the A320 is a very important piece to that puzzle. So we really want to be in a position to make the decision by the end of this decade.
You mentioned the assembly lines you have in the United States. Do those assembly lines insulate Airbus from a second Trump presidency, do you think? There's already talk of significant tariffs.
We are a big manufacturer in the US that plays a big role in the equation. We have one assembly line for the A320. We have an assembly line for the A220 in the US, in Alabama, in Mobile, Alabama, and we're building a second assembly line for the A320. So we are a large manufacturer of commercial airplanes in the US, and indeed that plays a big role in the equation.
What about what is happening in France right now? How much concern does that give you? The political story in Paris is chaotic, and we're all trying to understand what the implications are for France, not but just for France, but also for the whole of the European Union. The whole of Europe is going to be affected by what happens in France.
It's important for us to have visibility, to have predictability, to be able to have the main countries of Europe working together in our activities, defense, space. These are sovereign activities for Europe. And indeed, we don't like uncertainty, and what's happening in France at the moment is a bit of a concern. So we are
a bit of a concern.
We are expecting government clarity and a way forward as soon as possible.
But is this are you directly impacted, or is this? Do you expect any direct impact? I.e., new French government talks about Airbus, changes the way that Airbus can operate in France, or is it just a uncertainty at the core of Europe means that there's less decision-making, less quick decision-making in terms of kind of how the industrial story develops on this side of the Atlantic?
There's no direct impact for us, but it's more of the latter, meaning we need the ability to have political decisions, to have a political environment that is able to navigate the challenges that the region has. So it's nothing direct, but more indirect impact for us.
In terms of where we are with the economy right now, some data seeming to suggest that we are seeing a slowdown. We referenced earlier on what was happening with the slowdown that some of the narrow-body carriers, the Ryanairs of this world, are seeing. What do you see in terms of demand going forward? Does it remain as strong as it is right now? Do you see an economic slowdown coming in our future? Europe is kind of growing slowly at the moment. There's signs maybe of a slowdown in the United States. What is your estimate of kind of what the economic picture looks like right now?
Just to be clear, we don't see a slowdown in the demand for commercial airplanes. There's maybe a bit of softening of the acceleration of the pace, but it's increasingly important. We see that the estimation for the forecast for the fleet is again a doubling in the next 15 to 20 years. So the demand around the world for flight is really increasing, and that's what we're serving. So we don't see it as a recession. It continues to be an increase.
Well, that takes me on beautifully to my final question, which is, you talk about a doubling, you talk about this huge amount of demand, you talk about this insatiable appetite for aircraft. Does the infrastructure exist to provide that? Does the fuel infrastructure exist? Will it exist to provide that? Europe is struggling this summer with ATC issues, with airport issues. We can build lots of aeroplanes, but are we building the kit that serves the aeroplanes, the fuel that fuels the aeroplanes? And I'm just wondering whether or not there are now limiting factors beginning to creep into the market, which may subdue the demand that you're talking about.
Well, there's always some local situation here and there, but globally the aviation system is growing. It continues to grow fast. Aviation is an industry where you don't need a lot of infrastructure to provide the service. You need an airport at the takeoff, at the departure, and an airport at the arrival.
But you need air traffic control in the middle, and you need fuel to put those...
Which we have. So we are very far from having saturated the skies. Even in Europe here, you see the sky is empty. So there's plenty of room to grow.
Quite close by.
And the infrastructure is the air. So we are benefiting from a natural infrastructure that is there, which is not the case for other means of transport. So we are just at the beginning of aviation. We need to get organized, and of course there are bottlenecks here and there in the growth, but there's still a lot of potential for growth.
Guillaume, great to see you. Thank you very much, Steve, for stopping by to see us.
My pleasure.
Here at Farnborough. Thank you very much. Guillaume Faury, the CEO of Airbus. Guys in the studio, in the warm studio, back to you.
We have very little sympathy for you, bringing us that, of course, that interview with Airbus. Bloomberg's Guy Johnson of the Farnborough International Air Show. We thank you so much. Coming up on the program, as support builds for her Democratic Party's presidential nomination, we'll take a look at Kamala Harris's possible energy policies. More on that conversation next. This is Bloomberg.
So in the days and weeks ahead, I, together with you, will do everything in my power to unite our Democratic Party, to unite our nation, and to win this election.
Think about take-backs. I was told I was going to get to debate Kamala Harris, and now President Trump's going to get to debate her. I'm kind of pissed off about that, if I'm being honest with you.
So Kamala Harris and J.D. Vance there on the twists and turns of the US election. But let's have a little think about what a President Harris would look like if she makes it to the White House. As California Attorney General, she brought lawsuits against fossil fuel companies. She prosecuted a pipeline company over an oil leak and investigated ExxonMobil for misleading the public about climate change. So how would the US Vice President and likely Democrat nominee find a balance between the energy industry and climate activists? Let's go to Bloomberg's Stephen Stopczynski for analysis. Stephen, she's said to be a tougher oil industry opponent than both Trump and Biden. What sort of policies could we expect from her on the oil and gas sector then?
You know, I think largely you're going to see her supporting what Biden has kind of pushed forward. And he's been sort of soft on oil and gas. He didn't follow through with a ban on oil and gas drilling on public land like he said he would. But that being said, you know, if you look at what Kamala Harris has actually proposed during her campaign in 2019, she was actually pretty strict on oil and gas, one of which was a ban on fracking. That's a popular way of drilling for shale oil and gas in the United States. Now, will she actually follow through with a ban if she's nominated and becomes president? It's quite unlikely, but it does show that she is on the stricter side of things. Biden, for example, had never proposed a ban on fracking. As well, you know, Kamala Harris has been somewhat opposed to offshore drilling as well. So that could be another area that she's a bit stricter. But in general, will also be holding big oil companies accountable. As you listed off at the beginning of the segment, she's been quite strict as Attorney General in California. She was quite strict and hard on these oil and gas companies. So she's not going to let them get away with breaking any environmental rules or anything like that. And lastly, Biden put a pause on new developments of liquefied natural gas export facilities. It has widely been viewed that come January next year, that would largely be removed and projects could move forward. But will Harris as well potentially look to expand that? Because LNG development has been shown to release methane emissions during the production of shale gas or transportation and liquefaction and transport of LNG. So is that something that a potential Harris administration would like to look stricter at? That's another area that could differ a little bit from the Biden administration.
And so, Stephen, where does all of that leave oil and gas producers? I was looking back, courtesy of some of the comments on the Markets Live blog, looking back at the first Trump presidency, and it was interesting to see that, yes, that the production stateside of energy products and the drill, baby, drill mantra was real. But actually, we saw downward pressure on prices, perhaps as a result, perhaps not. And this in the pre-COVID period I'm talking about. So how is the sector bracing for this, for what could be some political change or might not be?
Yeah, I mean, I thought what was interesting is, there was certainly a drill, baby, drill chant during the Republican convention led by Trump. And that's not really the view in Houston or with shale drillers in the United States. They're more like, how can we get the most shareholder value possible without having to spend more on drilling, because they're looking at efficiencies as opposed to drilling more. Already, U.S. oil and gas production is at a record high under the Biden administration. It's gone up during every administration over the last 3 administrations. And that's likely going to be something that continues in the future unless there are harsher rules. But the view on really increasing output more than we are right now is not in the place. Oil prices aren't in a comfortable enough place for shale drillers to really look to expand production. Demand in the United States domestically has sort of lagged, as well as abroad. Chinese demand isn't living up to where folks thought they would be this year, especially in the post-COVID world. So it's unclear whether that drill, baby, drill will be embraced by the industry under a Trump presidency.
We should point out as well that, and I think for international audiences it's important, that so much of the South's GDP comes from the oil industry as well. Bloomberg Stephen Stepinski, we thank you so much for bringing us that crucial context there. Part of that conversation in terms of energy policy and arguably climate policy as well is still drilled into, well, pun excluded. I didn't mean to do that. But it's so drilled into the climate change conversation as well, and some sort of admittance of whether or not that really is a part of not only the environmental narrative, but the investment narrative as well. We have the perfect guest to talk about it. Tanya Rosh, joins us this morning. She's the head of Cap Bond Portfolio Management over at 12 Capital. Tanya, a pleasure to have you on the program. Look, we're talking about this kind of climate policy for a very long time. We're also talking about hurricane season. It feels like, again, pardon the pun, I really don't mean to do this, but the perfect storm for your part of the markets. Walk us through what you're seeing and the trends you're seeing, at least for the month of August, as you balance the politics and the environment.
Yes, absolutely. So we see in the eye, so to speak, of the hurricane. So it's a very active season ahead. There's really largely a consensus in the community of the public institutions, the private institutions, but also universities in terms of what they forecast for this season. And it's going to be a very active season, the US Atlantic hurricane season. So what you usually have is around 6-7 hurricanes, but we have a forecast of 11. So that's quite, well, not double, but almost double. And also the accumulated cyclone energy, so that's a measure of the energy that's just around in the water and in the atmosphere, that is also almost double than what we usually see. So that's on the horizon. And what does it mean for like our asset class? So in insurance-linked strategies, we basically do reinsurance in a securitized format for investors. So this is, of course, very important if we go into a season with a lot of potential for catastrophic losses. But it's very, very important to note that it takes much more than a season forecast for a season to actually have impact. So you need a storm to actually do a landfall, and we're talking the US landfall here, because that's where really all the values are, the insured values. And that landfall needs to be in an area that also needs to be populated. So there's a lot of conditions for it to really make an impact.
Well, quite, because I'm looking backwards now. The whole of Jamaica was declared a disaster area when Beryl hit, and yet cat bond investors weren't called on to cover any of the costs because the air pressure required for a payout wasn't reached. You also didn't have cat bonds triggered for the storms in Mexico and Texas. I just wonder how ethics factor into the criteria around these bonds, whether the thresholds are actually appropriate.
Yeah, that's a very good question, and definitely one that's being a lot in the discussion. It's not that there were no insurance payout, it's just that it was not going as high for a cat bond to trigger. So you actually had the Caribbean, the CRIF facility paying out. There was a parametric cover for Jamaica because of the heavy rain of the precipitation. So there were some payouts. But in the cat bond market, we really only covered the most severe events, very, very, very high up. So it's basically, you could say, the last layers where something triggers. So it was, simply to speak, just not severe enough to go into the cat bond market.
And Tanya, do you expect the sector to continue to deliver, with that in mind, deliver yields well above many other asset classes? That's why they're proving increasingly popular.
Yeah, I mean, we would expect that. Obviously, we also don't have a crystal ball. We don't know what the season brings if there's a very, very severe event. But the supply and demand dynamics have been very beneficial for investors. So we see a lot of demand for cat bonds, for cat bond coverage from the industry. So a lot of cat bonds coming to the market, new sponsors, even new coverages. Thinking about that cyber part of the market that's growing. But the capacity to take on that risk, that has grown with much less speed. So that's always beneficial, and we would expect the trend to continue and to really deliver these nice spreads. If nothing happens in terms of catastrophe-wise, that could get a little bit back, so kind of normalize, but it would still be on historically very attractive highs.
Tanya, thank you so much. Thanks for joining us. Tanya Roche, Head of Cat Bond Portfolio Management at 12 Capital. Really interesting conversation and some quite eye-watering yields in that sector. So interesting to get her perspective on whether that continues. Yeah. European stocks then on the back foot this morning, in particular in London, and US futures pointing a little bit lower after the gains of yesterday.
Yeah, and you're starting to see even those gains that you saw in the Eurostoxx 50 that were coming in kind of green on the screen, paring back a lot of those gains, despite the fact that we had a pretty good earnings story coming out of SAP. Porsche, of course, dragging the market lower among some of the other healthcare stocks as well. Does that set up a little bit of a microcosm for Tesla and Alphabet later in the U.S. session as well? They will both be reporting after the bell. In the meantime, quick check on the currency market as well. You've got euro-dollar hovering around a 108.78, cable at 129.18. That does it for the opening trade. You've got me up for the pulse next. More ahead. This is Bloomberg.